Hi, I'm Karen Hartness, Mortgage Lending Manager with Keesler Federal Credit Union.
And I'm Bill Marquez. I'm a loan originator here at Keesler.
We'd like to share some information with you today to help you determine if an adjustable rate mortgage loan, better known as an ARM, is the right type of loan for you to purchase or refinance your home.
Homeownership is an American dream for many, and it makes a lot of sense for a number of reasons. Owning a home is a good way to build savings because you create equity as you make payments. Home values typically increase over time, which also increases the equity you're building.
Getting the best return on your investment is an important factor in determining which mortgage is right for you. Most people are familiar with a fixed rate mortgage. The borrower agrees to pay back a loan at a fixed interest rate for a specific amount of time. The monthly principal and interest stays the same throughout the duration of the loan. If you plan to be in your home for a long time, you may want the stability of a fixed rate mortgage. On the downside, if market interest rates fall to the point you want to take advantage of a lower rate, you would have to refinance a fixed rate mortgage and pay a whole new set of closing costs and fees.
On average, most homeowners move every 6 to 10 years, whether to change neighborhoods, upgrade to a larger home, or change jobs.
Since the lender incurs the expense of committing funds for a long period of time, the rates on 30-year fixed mortgages are higher than that of an adjustable rate mortgage.
This is one reason why an ARM can be very attractive to some buyers. For the first few years, it works like a fixed rate loan, but with a big difference. You enjoy a lower rate and lower payments than you would with a fixed rate mortgage. This means you could end up paying less than you pay for rent, or consider buying a larger, nicer home.
At a specified point in the loan term, the interest rate will adjust. For example, Keesler Federal's ARM adjusts only every 5 years. The adjustment could be very minimal or none at all. This change can work out in your favor if the cost of funds index rate goes down. If the index rate goes down, so does your monthly payment. The rate can go as low as the floor rate.
Some ARMs do not adjust downward automatically, so be sure to pay attention to the details for the loans you're considering. This is a great feature of a Keesler Federal ARM. The rate will adjust up or down depending on market conditions.
If market rates go up, your interest rate may rise at the specified adjustment period. This means that your monthly payment will change and may require a change in your spending budget. This is what makes some buyers nervous about an ARM. At one time, there was much negative publicity related to subprime lenders who allowed people to borrow more than they could afford to pay. Those lenders used questionable lending practices that led to unmanageable high interest rates later in the loan. Many other ARMs adjust yearly, whereas a Keesler Federal ARM offers a steady rate for 5-year increments.
Our ARM may change the way you think about adjustable rate mortgages. Our members' best interests are always at the heart of the way we do business.
We use a less volatile index than other adjustable rate loans to minimize payment fluctuations. This means your interest rate will not adjust more than 2% every 5 years, plus it's capped at 5% over the initial rate of the loan.
Let's take a $150,000 purchase, for example. Currently, Keesler Federal's ARM rate is 2.99, which translates to a low 3.06% annual percentage rate. With up to 80% financing, the mortgage amount financed would be $120,000. At the current rate and 30-year amortization, our ARM payment, excluding taxes and insurance, would be about $505 per month for the first 5 years. Let's say the market rate were to increase in 5 years by 1%. Your new interest rate would be 3.99%, causing your new principal and interest payment to be about $562.
Remember, this can work either way. When market rates go down, so can your rate and payment. The Keesler Federal ARM loan can be as low as 2.99%.
Now let's imagine you actually stay in the home for 30 years. With an adjustable rate mortgage originally financed at 2.99, the maximum rate you'd pay on this loan with the 5% cap on increases would be 7.99%. To give you an idea of the difference between mortgage types, a typical 30-year fixed rate mortgage at current rates of 4.625% equates to a payment of about $676 for principal and interest on the same $120,000 loan. That's a difference of about $171 per month for the first 5 years, or 60 payments. That comes out to a savings of over $10,200 for that period. If you fall into the national average and move within 10 years of buying the home, you would only experience one rate change with the Keesler Federal ARM.
Now here's another advantage to a Keesler Federal ARM. We offer a lender credit towards closing costs up to $2,500. Many times, your closing costs won't even exceed $2,500. Plus, your ARM, whether a new purchase or refinance, stays securely in Keesler Federal Credit Union's hands and will not be sold to an investor.
You can save money with an ARM. What's important now is to know that you can trust your lender to help you answer some important questions. With a lower rate and payments, should I consider a bigger, nicer home? What will be my ability to afford higher payments in the future? Should I purchase conservatively, take the payment difference and put it into a savings account? Should I use extra cash to pay down the loan faster and save even more?
Your Keesler Federal Mortgage Loan Advisor can help you decide what you can afford and which loan is right for you. If you'd like more information about adjustable rate mortgage, you can visit the Consumer Finance website.
In the important and sometimes confusing home buying process, we here at Keesler want you to get the best for your money.
Keesler Federal Credit Union offers a fast, easy loan process. Give us a call today at 228-385-5500, or you can apply online at www.kfcu.org.